Welcome back to the deep dive. It is Monday, January 26th, 2026. And we're kicking off the week with something a little different.
A bit of a specialized edition.
Exactly. Usually we take that wide-angle lens, on history or science. But today, we are zooming all the way in. We're putting on our Market Watch hats.
That's right. We're going strictly journalistic today. We've been watching the software infrastructure sector, and, well, 3 stocks just absolutely lit up the screeners this morning.
And that's our mission today. We're going to break down these big 3 movers: CoreWeave, Brand Engagement Network, and of course, the Titan, Microsoft.
And we want to get into the why. Not just what happened, but what's under the hood. What does it tell us about the AI space right now?
For sure. But look, because we are talking hard numbers, specific stocks, we have to do the housekeeping right up front.
The mandatory disclaimer. Let's get it out of the way.
Okay, so this conversation is for informational and entertainment purposes only. Neither of us are financial advisors. Nothing you hear constitutes financial, investment, or legal advice.
And all investments involve risk. You absolutely have to do your own research before, you click that buy button.
Think of us as your guides to the data, not your portfolio managers. But to make this all feel a bit more real, we're going to play a game. We're calling it the Paper Money Math Challenge.
I love this. It really grounds all the theory.
It's simple. For each stock, we're pretending you, the listener, invested $5,000 at Friday's closing price, and then we'll see exactly how much you would have made or lost by the closing bell today.
It puts the percentages into perspective. 5% sounds okay, but 200% sounds fake until you see the dollar signs.
Exactly. So let's get right into it. First up, the big mover, CoreWeave, ticker CRWV.
CoreWeave. Yeah, anyone following the AI boom knows this name. They're an infrastructure powerhouse. They're basically the plumbing for this whole AI revolution.
And the plumbing was in high demand today. CoreWeave closed at $98.31. That's up 5.73%. For a company this size, almost $50 billion, that is a heavy lift. What happened?
The catalyst was a massive headline. Nvidia, the undisputed king of AI chips, has invested another $2 billion in equity into CoreWeave.
Whoa. $2 billion. That is not just a partnership press release.
No, this is a major capital injection. They bought in at $87.20 a share, and the stated goal is to speed up the build-out of, get this, 5 gigawatts of AI factories by 2030.
Okay, let's pause on AI factories. That sounds like sci-fi. Is that just a fancy name for a data center?
Yes and no. It's a rebrand, but it's a specific one. A normal data center holds your emails, your photos. It's a warehouse. An AI factory is wall-to-wall GPUs just crunching models. It's a compute engine. It's not storing, it's producing intelligence.
So Nvidia is pouring money into the company that builds the houses for Nvidia's chips.
You're seeing the loop. It's a huge vote of confidence. But I was digging into their balance sheet, and you have to ask why they needed the cash. And I found a blinking red light for me. Their debt-to-equity ratio is 4.85.
Okay, break that down. What does a 4.85 really mean?
It's aggressive. So if your debt-to-equity is 1.0, for every dollar of your own money, you've borrowed a dollar. Manageable. At 4.85, for every dollar of shareholder equity, CoreWeave owes creditors almost $5. They're leveraged to the hilt.
That sounds really risky. Why so much debt?
Because the chips themselves, the Nvidia H100s, are insanely expensive. It's a land grab. They have to buy the chips to rent out the computing power. So when Nvidia comes in with $2 billion in equity, it's not just a nice gesture.
It's a lifeline.
It's a lifeline that helps CoreWeave pay for the chips they're buying from Nvidia.
It's circular financing. Nvidia funds its own customer.
Exactly, a tangled web. But the market loves it because the growth is just undeniable. The stock's trading at an EV to EBITDA of about 30.
That's a rich valuation.
It's premium, yeah. And they're not profitable yet. EPS is negative 182. But sales are up 133% quarter over quarter. So investors are just ignoring the cash burn for now.
So high growth, high debt, that's the story. What about the technicals on the chart?
Well, you're seeing a recovery story. The stock is actually still about 5.8% below its 200-day simple moving average.
And that's that big long-term trend line, right?
Correct. It's the psychological line in the sand between a bull and a bear trend for a stock. So it's been trending down. But today's news is helping it challenge that. Another thing is the RSI, the Relative Strength Index. It's sitting at 61.87.
Is that a danger zone?
Not yet. Anything over 70 is considered overbought. Maybe it's gone up too fast. At 61, momentum is building, but it's not overheated. There's room to run.
And Wall Street seems to agree. I saw D.A. Davidson upgraded them from neutral to buy. Price target of 110.
Right, which implies another, 10% upside from here?
Yeah.
The street is bullish.
All right, time for paper money math. Let's see what that upside looks like in your pocket.
Let's run the numbers.
Okay, so $5,000. You bought CRWV at the previous close of $92.98. That gets you roughly 53.77 shares.
53 and 3/4 shares, call it.
The price jumps to $98.31. That's a $5.33 gain per share. So 53.77 shares times that gain. Your profit for the day is about $286.
$286. Not bad at all. That's a nice dinner out just for, catching the news before the market opened.
A very respectable day's work. But hold on. Because if CoreWeave is a solid base hit, our next stock was a grand slam.
Right.
We have to talk about the wild card of the day. Brand Engagement Network, BNAI.
Oh, BNAI. Yeah, this one had the trading forums just screaming today. It's the kind of move you just don't see very often.
Screaming is right. Get this. BNAI closed at $62.08. That's an increase of 276.7% in a single day.
You nearly tripled your money in 6.5 hours.
I mean, if you took a lunch break, you missed a 30% move. What on earth happened? Did they cure a disease?
Nothing that dramatic. It was a perfect storm, really. You had a news catalyst, and then you had the market mechanics. So the news was a $2 million AI licensing deal.
Wait, hold on. $2 million? We just talked about Nvidia dropping $2 billion. $2 million sounds like nothing. Why would the stock do that?
Context. It's all about context. BNAI is what's called a nano-cap stock. Even after this jump, its whole value is only around $278 million. For a tiny company like that, a $2 million deal is huge. It validates their tech. It proves they exist.
Okay, so the news was good for their size, but 276% good. That feels like more is going on.
You are 100% right to be skeptical. And that brings us to the short squeeze. We have to look at a number called the short float. For BNAI, it was 45.56%.
Okay, explain that. What is a short squeeze?
Right. So, shorting in the stock is betting it'll go down. You borrow shares, sell them, and hope to buy them back cheaper. A 45% short float means that nearly half of all the available shares were being used to bet against the company.
So half the room is betting on failure.
Exactly. Then, good news hits. The price goes up a little. Suddenly, all those short sellers are losing money. To stop the bleeding, they are forced to buy the stock back. But their buying pushes the price higher, which forces more shorts to buy.
And it just cascades. A feedback loop.
It's a stampede through a tiny door.
Yeah.
But I have to be the boring expert for a second. The fundamentals under this squeeze are, well, they're challenging.
How bad is it?
The reported sales were $80,000.
$80,000? That's not a company. That's a salary.
Right. And their profit margin is negative 30,811%.
Negative 30,000%. I didn't know that number could exist.
It just means their expenses are astronomical compared to that tiny revenue. So you have to understand, this move is a technical event, a trading anomaly. This isn't an investment based on fundamentals yet.
And I'm looking at the RSI. We said CoreWeave was at 61. BNAI is at 97.37.
Stratospheric. I mean, it's so rare to see that. Remember, over 70 is overbought. 97 means there are basically no sellers left. A pullback is almost statistically guaranteed from that level.
Steel rubber band stretched to its limit.
Exactly. Yeah. And the weekly volatility is almost 65%. This is the casino table of the market today.
Okay, but for our paper money casino player, let's do the math. This is the big one.
Let's see the jackpot.
$5,000. You bought BNAI at Friday's close of just $16.48. That gets you way more shares. About 303.39 of them.
So you're sitting on over 300 shares.
The price explodes to $62.08. That's a gain of $45.60 a share. So your profit for the day is a massive $13,835.
Wow. You more than tripled your entire stake in one day.
That's not dinner money. That's, I don't know, a used car, a down payment on something.
It is life-changing for a single day trade. Yeah. But I have to say it again. This is like catching lightning. For every one of these, there are 10 others that just go down. The risk, given those fundamentals, is just extreme.
Fair warning. Okay, let's pivot. Let's get back on solid ground. We've had the builder, we've had the rocket ship. Now for the steady giant, Microsoft. MSFT.
The anchor, yeah.
Hmm.
Microsoft had a much, much quieter day. It closed at 470.28. That's up just 0.93%.
Less than 1%. After BNAI, it sounds boring, but this is a $3.5 trillion company.
Yeah.
Moving at 1% is like moving mountains of cash.
You said it. It's like turning an aircraft carrier. News today actually ties right back to CoreWeave. Microsoft announced its second-generation Maya 200 AI chip.
Their own in-house silicon.
Yep. And the big takeaway here is that Microsoft is trying to stop buying so many Nvidia chips. They want to own the whole stack, from the software like Copilot down to the very silicon it runs on.
It's that vertical integration play. They stopped paying the Nvidia tax.
Precisely. It's cost control. But right now, the market is also just looking at the calendar. Earnings are Wednesday, January 28th. So today's price action is really just investors getting their position set before that report.
Let's look at the quality metrics just to cleanse the palate after BNAI.
It's a different planet. Return on equity is over 32%. Profit margin is almost 36%. This is a cash printing machine. It's the safety play.
Analysts seem to agree. Stifel reiterated a buy rating, though they tweaked the target down a bit to 520.
Which is still a nice bit of upside from 470.
Yep.
So they still see value.
And the chart, what's it saying ahead of earnings?
It's just in a holding pattern. It's trading right around its 20 and 50-day moving averages, basically flat. And the RSI is 49.07.
49. That is dead neutral.
The dead center, yeah. The stock is just taking a breath, waiting for Wednesday to pick a direction.
All right, let's finish the paper money math challenge with the giant.
Let's see our pizza money.
$5,000 into Microsoft. At the previous close of 465.95. That gets you about 10.73 shares.
A little over 10 shares. Not many.
The price moved up to $470.28. A gain of $4.33 per share. Your total profit for the day, $46.46.
Pizza money.
It is. Pizza money is still profit. But the contrast is everything. You risked it all on BNAI for a potential 13 grand. With Microsoft, you slept like a baby and made 46 bucks.
And that's the market, right? Different tools for different jobs.
So let's just recap this wild hypothetical day. What a cross-section.
It really is. You had CoreWeave, the strategic growth play, up almost 6%. You had BNAI, the lottery ticket short squeeze, up almost 300. And then Microsoft, the defensive giant, up almost 1.
The factory builders, the app creators, and the empire itself.
And if you connect the dots, Nvidia is funding CoreWeave to buy its chips. Microsoft is building its own chips to compete with Nvidia. And tiny players like BNAI are just trying to find one little application that works.
It's an incredibly tangled ecosystem.
It is. But the takeaway from today is that the market is rewarding two things: AI infrastructure, like CoreWeave's factories, and AI application, like BNAI's little deal. Meanwhile, the giants are just trying to own everything.
Which brings us to our final thought.
It does. I want to leave you with this question. We always think of tech as software, right? Lines of code. But with Nvidia funding actual factories and Microsoft building physical silicon, are we heading into a future where the biggest competitive advantage isn't the best code, but who literally owns the factory floor?
Who owns the physical stuff that makes the code run?
Exactly. The digital world is getting very, very physical. And that's where the money is flowing.
Something to chew on. Thanks for joining us on this deep dive. We'll be watching those Microsoft earnings on Wednesday, but for now, class is dismissed.
See you next time.